London and Sydney-listed Berkeley Energia is working towards uranium production at its Salamanca project in Spain. The company says it could be one of the world's lowest cost producers of the metal. Paul Atherley is MD and he joins us now with more. Paul, welcome. First of all, before we get on to the project, which clearly, as you say, is very exciting, why uranium?
We're at the bottom of the cycle. The world needs more uranium. China's building 20 nuclear reactors as we speak. There's 60 new reactors being built around the world. There is a demand for uranium that's going to massively outstrip supply in the next few years. So we're literally pouring concrete at the bottom of the uranium price cycle, aiming to be in production when this demand comes in.
Now, the Salamanca project, it's in sort of the northern part of Spain. Spain, as we know, generally speaking, is economically needy. So obviously they're wanting these sort of projects to come along. But tell me a little bit more about what it is that consists of this project.
And very simply, it's a historical uranium mining area. There's been many mines there before. We've come along and found some more resources that make this project very, very low grade, very, very low operating cost and very, very economic, even at the bottom of the cycle. And as you say, in this part of Spain in particular, there is a high demand for jobs. So we're going to invest something like €250 million, create 450 direct jobs, 2,000 indirect jobs in an area where last year Castilla y León lost 25,000 people. So we're creating jobs in a part of Spain where they very much need it.
What about the project itself? Low cost? How low? And I mean, what sort of advantage is it going to produce?
Roughly, the way to understand it is we have an operating cost of around $15 a pound. Even at the bottom of the uranium price cycle where we are now, our 12-year lows, the spot uranium price is around $21 a pound and the term price is about $30 a pound. So here we are at the bottom of the cycle. Our operating costs are below the bottom of the cycle costs. And then we have the other advantage is our capital costs are very, very low. We've got a capital cost of a starting upfront capital cost of only $100 million. So we've got $100 million upfront capital cost for one of the world's lowest cost producers, which is profitable, can make money right at the bottom of the cycle.
Why is it low cost? And is that low cost only available for a short window, or is it a long-term?
No, it's long-term low cost because we have this one ore body, it's called Zona 7, and it occurs very close to the surface, very high grade, it's 4 meters below the surface, it's got a grade of about 500 or 600 ppm, and it's got very good metallurgical properties and very good mining properties. So that's the reason why the operating costs are low. The capital costs are low, partly because you funded it. Basically, the British taxpayer, along with the German taxpayers, put a lot of money into the European Union. And over the last decade, Spain has drawn down and built superb infrastructure. That is roads, airports, power lines, all the things we need to develop this mine. So in fact, we have, in effect, a $150 million capital dividend to our project. It would cost us $150 million more if we didn't have that existing infrastructure. So that's why the capital cost is low, because Spain's done a great job in drawing money down, building infrastructure funded from the European Union.
The EU, of course, has control over the uranium market, doesn't it? So you're very much under controlled by the EU. At the same time, as you said, with the Spanish economy as it is, were you given incentives? Are there incentives available from the EU to continue to operate and boost this project?
Not specific to uranium, but specific to a regional development in Europe, and particularly in Spain. There are regional benefits to us, which we get a roughly an 8% refund on the capital that we put in, and we get some various tax incentives, that accelerated depreciation, that encourages us not just to build the project in the first place, but to go on and reinvesting. In the uranium perspective, it is Euratom, which is the European Union Uranium Agency. Part of their job is to source uranium for the European Union's 140 nuclear reactors. Currently, those reactors are fed by 60% from Kazakhstan, Russia, Niger. And obviously there's some desire, if we're building the only uranium mine in Europe, and it's a top 10 producer in the world, there's a big desire for Euratom, for us to come into production and start displacing some of that supply from outside Europe. So security of supply, the Euratom's come out very clearly and said, we welcome the Salamanca project because it assists in the community's security of supply of this very important clean energy fuel.
Now, you have already produced, haven't you? I think, in fact, you've already signed a 5-year forward contract to supply uranium to Curzon, is that right? And then, obviously, you've got then to find other customers as well. We'll get on to that in just a minute. Explain more about that contract and how you're going to fulfill that.
What happens is the uranium spot price is depressed. It's very low, as I said, it's at 12-year lows, but the forward price is very strong. And so what happened is we get counterparties. In this case, Curzon is a trading house, but we also have big utilities from the European Union and from the United States saying, we would like to contract with you for the next 5 years. And those average contract prices are above $40 a pound. That's what we're signing, that's what we're discussing with people. And here we are with operating costs at $15 a pound. So it's clear indication of where the consumers feel the uranium price is going, because they want to lock out term contracts during that period at double the current spot price.
Is that the income from that going to contribute to the mine? Presumably there's other costs involved as well.
We haven't drawn down on these forward contracts. What we'll do is we'll sell into them. What it means is we've got a very, very good operating margin going forward. So it's a very strong add to the economics of the project.
About other offtake agreements, you
got more in train. And we will, over the next few weeks, we hope to be announcing future. This is previously disclosed that we're in negotiations with utilities, and hopefully we can sign and announce them in due course.
Yeah. How about the costs then of completing the build of the project to get up to full speed in production?
As I said, we need $100 million up front to build the asset. We have roughly 30-something million dollars in the bank today, and we've commenced construction. In fact, we've ordered a crushing circuit that's now been fabricated. It's now arrived in Madrid, and we'll bring that to site shortly. So we can start pouring concrete, and steel work are coming out of the ground. But we still need roughly another $65 million US dollars. And we're in the final stages of that financing, and we hope to announce that over the next few weeks. I mean, don't want to give any guidance on that, but in due course. So as we've previously announced, these negotiations are ongoing and they're well advanced.
So how do you sell the opportunity then to investors in a company like this? I think you've got a market cap in excess of £100 million. You're listed in both Sydney and London, as I said, at the top. Obviously, as a company going somewhere, you've got an asset that's already paying. Sell it on the basis that you've still got a lot of hurdles to come in getting to the end of the project.
The best time to buy a mining asset is at the bottom of the cycle. I mean, there's no question about that. So here we are with a profitable mine right at the bottom of the uranium price cycle. So you can form a view on when the uranium price will recover. It might be in 1 year's time, it might be in 18 months' time. There's a general consensus that it will recover. And who do you want to own during that period? You want to own the only major uranium mine in the world being constructed today, because clearly that's the one going to benefit from it. So it's a very simple investment in saying, these guys are building it, these guys are funding it, it's going to happen. Here's my exposure to the recovery in the uranium price. There is one other exposure that's worth having as well, remembering a big part of our success has come from exploration. We found this Zona 7 deposit, and we're now looking at commencing a quite broader exploration campaign that will look to find more of those. So there's really two leverages to it. One is obviously the leverage to the uranium price itself, which is, as we've seen in the past, the uranium price can be quite spectacular. In the last run, the uranium price went up 22 times or something, which would be nice this time around. But also remembering that we've got this organic growth in the asset itself. We've got a huge exploration area, and we're going to be targeting for more Zona 7s.
Clearly the mine life is at least 5 years, because that's the contract you got. What is the mine life at the moment, and what are you hoping to explore to find to give you more? 14
years is what we're starting off with, but the way we look at it is we have a geological endowment. That is, if we invest every year, and we have some very good incentives from a tax perspective to do that, exploration to unlock that value, there's no reason why we can't be operating long into the future. And the example of this is assets, mining assets around the world, where they've reinvested every year. And typically a mine manager will say to the geologist, we're doing £4.5 million. So guys, we're doing £4.5 million this year. You guys have got to find £4.5 million. So as long as they're funded for that program, then you can see you will maintain that 10 to 14 year window going forward, as long as you continually invest every year, and that's what our plan is.
Yeah, okay. One final thing, of course, the German elections a little bit later on this year. We've got our own elections here in the UK. The Green parties are beginning to find their feet. They're increasing their footprint almost at every single election. How do you sell this to the environment lobby? Because it is a growing lobby, and there are some big questions ultimately about where this is going.
The big question is, how do we get clean energy? How do we decarbonise? And the only scalable baseload for zero carbon electricity generation is nuclear. And so consequently, there are currently 60 nuclear reactors being built around the world. China is currently building 20 and has got another 50 planned. So yes, there's a green lobby that doesn't like nuclear, but when it comes to governments making decisions about where they're going to get their baseload clean energy from, there is no developed economy in the world, apart from Germany, that hasn't got nuclear either 10 to 20% of its base load. So I think the argument's already won. The Euratom has made it clear for the European Union that argument's won. The US is the same. They're at very high levels. They're close to 20% nuclear. And the emerging economies, India has just announced 10 new reactors. China's building 20. Every time you see a new emerging economy coming through that's maturing, they recognise that they need this base load. So I think, yes, we'll hear noise, but you've got to look at policy, and policy says nuclear is part of the mix.
Yeah. Okay, Paul, it's a pleasure. Thanks indeed for joining us. Paul Atherley is MD at Berkeley Energia, and the company is, as we've heard already, producing the metal. It has a forward contract to fulfil, also looking for new partners. Watch out for news on the company in the next few weeks.